Have you ever wondered what would happen if house prices across Britain started falling sharply? For many people, their home is the biggest thing they own. It is not just a place to live. It is also where much of their savings and wealth are stored. But now, experts are warning that Britain's housing market is facing serious pressure. Rising mortgage costs, higher living expenses, and economic uncertainty are making it harder for people to buy homes. So what is happening? Why does it matter? And how could it affect homeowners, renters, and the wider economy? Let's find out. Before we begin, don't forget to like this video, subscribe to the channel, and turn on notifications so you never miss the latest news and updates. The UK's housing market has been under pressure for some time now. Over the past few years, house prices increased rapidly in many parts of the country. Low interest rates helped people borrow money more easily, and demand for homes remained strong. But things have changed. Today, borrowing money to buy a home has become much more expensive. Mortgage rates have increased compared with the very low levels many people enjoyed in the past. This means that anyone buying a home now may face much higher monthly payments. Let's look at a simple example. Imagine someone borrowed money to buy a house a few years ago when mortgage rates were very low. Their monthly payment might have been manageable. Now imagine a new buyer trying to purchase a similar home today. Because mortgage rates are higher, their monthly payment could be hundreds of pounds more expensive. As a result, many people simply cannot afford to buy. When fewer people can afford homes, demand starts to fall. And when demand falls, house prices often come under pressure. This is one of the biggest concerns facing the housing market right now. Many experts are seeing signs that buyer interest is weakening. People are taking longer to make decisions. Some buyers are delaying purchases. Others are choosing to stay where they are until conditions improve. This slowdown is starting to affect house prices in some areas. While prices have not collapsed nationwide, there are concerns that values could continue to weaken if current pressures remain. Now you might be asking, why does this matter so much? The answer is simple. For millions of British families, their home represents a large share of their wealth. Many people spend years, or even decades, paying off a mortgage. They often see their home as a financial safety net for the future. If house prices fall significantly, homeowners could see the value of their property drop. For example, imagine a house worth £300,000 today. If prices fall by 10%, that home's value would drop to £270,000. That is a loss of £30,000 on paper. While homeowners may not lose money immediately unless they sell, seeing property values fall can still affect confidence. People often feel less financially secure when the value of their biggest asset goes down. And when confidence falls, spending can also slow down. This is where the wider economy becomes involved. When people feel wealthier, they are often more willing to spend money on things such as home improvements, furniture, cars, holidays, and other purchases. But when they feel less secure financially, they may decide to save more and spend less. If millions of people reduce spending at the same time, businesses can feel the impact. Shops may sell fewer products. Service companies may see fewer customers. Economic growth can slow down. This is one reason why governments and economists closely watch the housing market. The housing sector does not only affect homeowners. It can influence many other parts of the economy as well. But what about renters? Unfortunately, renters are facing challenges too. Even though some house prices may be under pressure, rents continue to rise in many areas. The main reason is that there are not enough rental properties available. Demand for rental homes remains high, while supply remains limited. When more people compete for a small number of properties, landlords can often charge higher rents. This creates a difficult situation. Many renters are already dealing with higher food prices, energy bills, and everyday living costs. Adding rising rents to the mix makes it even harder for some households to manage their budgets. So while homeowners worry about falling house values, renters often worry about increasing monthly costs. Both groups face challenges, but in different ways. Another important factor is inflation. Inflation refers to the rate at which prices increase over time. When inflation remains high, Central banks often keep interest rates higher to help control rising prices. Higher interest rates usually mean higher borrowing costs. And higher borrowing costs can continue putting pressure on the housing market. Experts say that much depends on what happens with inflation and interest rates over the coming months. If inflation becomes more stable and borrowing costs start to fall, the housing market could receive some support. Lower mortgage rates may encourage more buyers to return. That could help increase demand and stabilize prices. However, if borrowing costs remain high for a long period, pressure on the market could continue. At this stage, nobody knows exactly what will happen next. Housing markets are influenced by many different factors. Employment levels, wage growth, inflation, interest rates, government policies, and consumer confidence all play important roles. What is clear is that many families are paying close attention to developments. Whether you own a home, rent a property, or hope to buy your first house one day, changes in the housing market can affect your financial future. So let's quickly recap. Britain's housing market is facing growing pressure. Higher mortgage rates and rising living costs are making it harder for people to buy homes. Buyer demand has weakened, and house prices are showing signs of slowing down. This matters because many families have a large portion of their wealth tied up in their homes. If prices fall significantly, homeowners could see the value of their biggest asset decrease. At the same time, renters continue facing rising rents because there are not enough rental properties available. If you found this video helpful, please give it a like, subscribe to the channel, and turn on notifications for more news and updates. Thanks for watching, and we'll see you in the next video.